Secret number 1. Don't spend too much time on a life insurance quote. Do not be fooled by the low price quotes you get online. They don't apply to you unless you are extremely healthy. Statistically, only 10% of people who apply actually get the lowest price policy. The premium you end up paying has nothing to do with the initial quote you get online or from an agent. It is amazing to me how often I see people getting duped by an agent who quotes company X at a lower price than another agent. Life insurance policies are the same price no matter who you buy from. One agent or website quoting a lower premium means nothing. Prices for any given policy is based on your age and health. There are a few exceptions to this, but that is beyond the breadth of this article. Most life insurance companies have 10 to 20 different health/price ratings, and no agent or website can assure you the quote they give you is accurate. You have to apply, do a health check, and then go through underwriting, meaning you complete the mini exam with a nurse in your home, and then the company checks your doctor records and reviews and rates your health to get the real price of the policy. Remember that a health rating also factors in your family history, driving record, and the type of occupation you have. Only use quotes to help narrow down your choices to the top companies. You may want to consider a no-load or low policy. The more that you save on commissions, the more money builds up in your policy. You can even buy term insurance no-load, and save a lot on premiums. You will not get the help of an agent, which may be worth something if they are very good. The most important factor determining price is matching your particular health history with the company best suited for that niche. For instance, Company X might be best for smokers, Company Y for cancer survivors, Company Z for people with high blood pressure, etc. Secret number 2. Ignore the hype on term versus cash value permanent insurance. You can go crazy reading what everyone has to say on buying term insurance versus a whole or universal life policy. Big name websites give advice that I think borders on fraudulent. Simply put, there is no simple answer on whether you should buy permanent cash value policies or term insurance. But I do think there is a simple rule of thumb. Buy term for your temporary insurance needs and cash value insurance for your permanent needs. I have read in various journals and run mathematical equations myself which basically show that if you have a need for insurance beyond 20 years, that you should consider some amount of permanent insurance. This is due to the tax advantage of the growth of the cash value within a permanent policy. I am divorced and have taken care of my children should I die. I probably no longer need as much insurance as I now have. I have earned a great return on my policies and have paid no taxes. I no longer pay the premiums, because there is so much cash in the policies. I let the policies pay themselves. I would not call most life insurance a good investment. Because I bought my policies correctly, and pay almost no sales commissions, my policies are probably my best investments. I no longer own them, so when I die my beneficiaries will get the money both tax-free and estate tax-free. Since most people have short-term needs like a mortgage or kids at home, they should get some term. Additionally, most people want some life insurance in place for their whole life to pay for burial, help with unpaid medical bills and estate taxes, and so a permanent policy should be purchased along with the term policy. Secret number 3. Consider applying with 2 companies at once. Life insurance companies really don't like this trick because it gives them competition and increases their underwriting costs. Secret number 4. Avoid captive life insurance agents. Look for a life insurance agent who represents at least 50 life insurance companies and ask them for a multi-company quote showing the best prices side by side. Some people try to cut the agent out and just apply online. Just remember that you don't save any money that way because the commissions normally earned by the agent are just kept by the insurance company or the website insurance company without having your premium lowered. Plus, a good agent can help you maneuver through some of the complexities of filling out the application, setting up your beneficiaries, avoiding mistakes on selecting who should be the owner, the best way to pay your premium, and also will be there to deliver the check and assist your loved ones if the life insurance is ever used. Secret number 5. Consider refinancing old life policies. Most companies won't tell you, but the price you pay on your old policies has probably come down dramatically if you are in good health. In the last few years, life insurance companies have updated their predictions on how long people will live. Since we are living longer, they are reducing their rates rather dramatically. Beware, the agent may be doing this to obtain a new commission, so make sure it really makes sense. I really am amazed at how often we find that our clients' old policies are twice as expensive as a new one. If you need new life insurance, consider refinancing your old policies and using the savings on the old policies to pay for the new policy. That way there is no extra out-of-pocket costs. We like to think of this process as a refinancing your life insurance, just like you refinance your mortgage. Secret number 6. Realize life insurance companies have target niches that constantly change. One day Company X is giving good rates to people who are a little overweight, and the next month they are super strict. Company Y might be lenient on people with diabetes because they don't have many diabetics on the books, meaning they will give good rates to diabetics. At the same time, Company W might be very strict on diabetics because they are insuring lots of diabetics and are afraid they have too big of a risk in that area, meaning they will give a bad rate to new diabetics who apply. Unfortunately, when you are applying, a life insurance company will not tell you, "Hey, we just raised our rates in diabetics." They will just happily take your money if you were not smart enough to shop around. This is the number one area the smart agent can come in handy. Since a good multi-company agent is constantly applying with multiple companies, he or she will have a good handle on who is currently the most lenient on underwriting for your particular situation. The problem is that this is hard work, and many agents are either too busy or not set up to efficiently shop around directly to different underwriters and see who would make you the best offer. This is a lot harder than just running you a quote online. Secret number 7. Don't forget customer service. Most people shopping for insurance focus on companies with the lowest price and the best financial rating. Unfortunately, I know of some A-plus rated companies with low rates who I would not touch with a 10-foot pole, simply because it's easier to give birth to a porcupine backwards than it is to get customer service from them. Before I understood this, I used a life insurance company that gave the client a great rate, but 2 years later the client called me and said, "I have mailed in all my payments on time but just got a notice saying my policy lapsed." It turned out the company had been making lots of back-office mistakes and had lost a premium payment. We were able to fix it because we caught the problem so early. But if the client happened to have died during the short period the policy had lapsed, his family might have had a hard time proving that the premiums had been paid on time, and they might not have received the life insurance money, the loss of hundreds of thousands of dollars in that case. Secret number 8. Apply 3 to 6 months ahead of the time you need the insurance if possible. Don't be in a hurry to get a policy if you already have some coverage in force. But go ahead and apply right away, knowing that you might need months to shop around if the first company does not give you a good rate. Even though the life insurance industry is getting more automated, your application will still often be held up for weeks or months while the insurance company waits on your doctor's office to mail them the copy of your medical records. If you are in a hurry and buy a quickie no underwriting policy without going through the full health checks and underwriting that a mainstream life insurance company requires, you will end up paying 20 to 50% more because the insurance company will automatically charge you higher rates because they don't know whether you are healthy or about to die the next day. Secret number 9. Avoid buying extra life insurance through work if you are healthy. I am sure there are exceptions to this trick, but I have rarely found one. By all means, keep the free life insurance your employer provides. But if you are healthy and you are paying for supplemental life insurance through payroll deduction, you are almost certainly paying too much. What is happening is that your overpayments ends up subsidizing the unhealthy people in your company who are buying life insurance through payroll deduction. Usually the life insurance company has cut the deal with your employer and will waive the required health exam for all employees. Instead they just average the price for all the employees and offer $1 rates for males or females at any given age. Life insurance companies know they will pick up lots of unhealthy clients this way, so they jack up the price on everyone so that the healthy people end up overpaying so that the unhealthy employees get a cheaper policy. Also, unlike the guaranteed term policies which we recommend, most life insurance you buy through work will get more expensive as you get older. Also, group life insurance is generally not portable when you retire or change jobs, meaning that when you retire or change jobs you might have to apply all over again even though you will be older and probably not as healthy and risk being turned down for a policy. If the group plan does allow portability, they generally limit your conversion choices and force you to go into expensive cash value plans. I remember helping someone evaluate his supplemental life insurance. He was sure it was a better deal than any policy I could find him. Little did he know that the price of his group plan would go up every year. By the time he retired, his premium would have risen to over $10,000/year. I found him a policy for around $1,000/year that would never go up. Also, unlike his old group life policy, he could take the individual policy with him when he changed jobs or retired. Secret number 10. Do a trial application on a COD payment basis. Only send money with the application if you need the life insurance coverage right away. Sending a check with the application is a traditional practice agents used to do, I think mostly because it got them their commissions faster. If you send money with an application you usually get temporary coverage immediately, but if you already have plenty of coverage and are just trying to get better rates, ask your agent to do a trial application on a COD basis so you only pay once the policy is approved. If you do not send money, and you die before paying for the policy, there is no coverage. Secret number 11. Wear your shoes when the nurse measures your height. When the insurance company sends out the nurse to do your health check, try to be as tall as possible if you are overweight. In most states you are allowed to wear shoes, and if you are a little overweight your taller height/weight ratio will look a little better to the underwriter who is determining your health rating and policy price. Also, do your exam early in the morning with no food in you. This will make your cholesterol count and various health ratios look the best. Secret number 12. Be careful with extra perks and riders. Most policies come with options like accidental death benefit, child riders, disability riders, return of premium, etc. If you do the math on most of these extras, they usually don't make smart financial sense. Life insurance companies are out to make money, and these riders are usually profitable because they either cover something that rarely happens or they are so stringent that the benefit never gets paid out. Keep things simple and focus mainly on getting a life policy to cover your life without many strings attached. Again, a good agent can help you weigh the benefits of the extra riders. but be wary of an agent who tries to tack on every possible extra rider.